Okay, so we are going to get started on our next webinar here with the market development email campaign. So this one is going to be a little bit more focused on the contracting process. If you were part of the email campaign, or if you got the email last month, you would have seen a little bit of the background and just the general facts that Eric helped me with quite a bit on, just to understand and learn how beans are getting from point A to point B. And so now we want to kind of dive into the nuances that come with that. So bringing in a farmer, a couple traders, and a trade analyst into this conversation just to hear some of the different perspectives, different opinions, and different experiences that they're working with. So we're really excited to talk through this a little bit. So we're going to go ahead and begin with some introductions. So I am Emma Peters. I am the International Markets Coordinator here at the Illinois Soybean Association. And my primary job is to kind of do some of this work with bringing together the social media and communication side of what we're doing with ISA and elevate that and bringing together our farmers, bringing together different people in the industry and just continuing that conversation. So Eric, do you want to go next?
Yeah, of course. My name's Eric Woodie. I have worked for Illinois Soybean Association for going on 9-ish years now. So kind of the one of the older sort of contracting work that has worked, I think, pretty well for us. At least that's good news. So old time trader, all this gray hairs from trading back when I was younger, traded for nearly 20-ish years if you count some of the recent. So yeah, happy to be here.
Awesome. Clayton?
Yeah, Clayton Charles, currently at FS Grain here in Morris. This is year 15 of trading, and like Eric, it is gray up here. I was trading out in Kansas City, and I still remember my mother-in-law came out to visit for the first time when my wife and first daughter were out there. She doesn't say anything other than, "Wow, you look gray." And this is only after like a month of not seeing me. So the trading business is definitely wear and tear on you. But yeah, so 15 years of trading kind of across the country in different modes of transportation. So yeah, like Eric, happy to be here. And I love to talk, so it works out great.
I think we've got 3 really great people for that.
Yeah, it might be a problem, yeah.
And Jeff?
Yeah, hey, good day, everyone. Jeff O'Connor, Northeast Illinois, about an hour south of Chicago. Corn, soybean, wheat farmer. I guess I have to defend farmers and say, if you guys think your job's tough just trading, try managing the production side as well as the trade and manage. Yeah, but yeah, there's a lot of stress in what we do because we want to get it right, because we know more than just profitability weighs in on how we do, whether it's trading or production. It goes back to how we feel about what we do and the way we can contribute. So yeah, I'm going to offer my 12 years of experience working with specialty contracts and even some more time before that where people didn't require contracts. We just grew some product that we knew had a premium with it. So looking forward to the discussion.
Yeah, awesome. And thank you all for being here. I really appreciate this. And so obviously we'll just kind of get right into it. And I'm going to start off with probably, the most broad burning question, obviously, that's out there about the contracting process. And so you can kind of answer that each as you wish, and then we'll go from there. But maybe Jeff, you want to start off with just talking about how the contracting how contracting plays a role in today's soybean marketplace, but then also how have you seen that kind of evolve over time? You're 12 years in the specialty side of things, but your lifetime of experience just as a farmer, how have you seen that side of things change?
Yeah, sure. Yeah, I was not going to let them answer first because I think they can build off what I say. And when doing that introduction, I did not really realize, but it just quickly came to mind. Formally, 12 years of really detailed contracts. It was actually first corn, and then I did corn and bean at the same time because I didn't have enough to manage in my life. And then it just went to beans, and it kind of floated around on different opportunities with beans. Currently domestic production, before that, domestic usage, before that, international. But what I quickly realized we've had some specialty products in our area. White corn was very common. But back in the day, last century, boy, contracts were really nothing more than a one-page piece of paper, where they were getting grain. It was just very simple, but then something really changed in that marketplace to where, and it's probably the size involved when it was a national organization, national commodity organization, such as a CGB, a Cargill, a Schooler Grain. Back in the day, it was just a local end user who was looking for a product. So it's changed a lot. I can circle back around to this, but the saying "the devil's in the details" is true, but none of us really enjoy reading through those. I think every bit of it starts with what's important in every other aspect of farming. We have relationships with our land, with our landowners, with our machinery, our input suppliers. It starts with a strong relationship with who you're going to be working with before you ever really start to take that contract seriously. So that's where I'd start. Get a relationship and know the people.
Well, and I think we can all thank Cargill for the legal terms on contracts after all their and that's what it really is, right? All it used to be, hey, you've got shipment period. Here's how much we're buying, whether it's bushels or bushels per acre, depending if you're specialty or not. But there was no legal terms whatsoever. And now all of a sudden it's a on a export contract, it could be 1 to 6 pages, depending on how many terms. If your legal team is looking at it, and it's long, right? And there's so many factors between a domestic one and export one now, and then you got act of God clauses, and you got all these different legal issues that have derived over the course of the past 30 years that definitely has changed the contracting scenario than what it was 30 years ago.
Yeah, that's such a great point. And Clayton certainly remembers it. I think our early days, we would just go off emails and stuff, and that would generally be a sufficient. How we got away with that for so long, I have no idea. But I think from the ease of it is you've seen some real improvements on timing. And like I think both Jeff and Clayton said, it's really the value that you've seen probably both domestically and in the export level has been about kind of ensuring that all parties are sort of considered well, so that things can go and execute well. For the most part, and I totally agree, getting to know who you're buying from, understanding their execution process, all those things matter. It has such great value, and I think all those things have really improved the contracts specifically to try to help ensure that everything is sort of smart and taken care of well, and particularly the export level, that you don't get screwed. There's some high level risks that happen in big ways when it comes to exports, and you want to ensure that those things are in a good space.
And we've all had the times where it used to be you picked up the phone to call a farmer or to call an end buyer, and then all of a sudden you get on a 20-minute tangent of talking, and you don't remember what you just did with farmer or end buyer. And it's like now you have a lot more guys do text, right? Because it's all right there. It's plain out.
Yep.
And in court, the NGFA trade rules, it's text, call, voicemail,
Exactly.
whatever. This piece of paper means nothing that I write down that I bought 10,000 bushels from Jeff, right?
Yeah.
It because he could say, oh yeah, that I never did that. Well, I have it here, but now it's just one-sided, right? So
that's been some real improvements. The efficiency of text and phone have made such a ease of it. So fortunately, the associations don't always fall in line with a lot of those pieces, but as far as the trade's concerned, I think that's really been a huge piece of where things have gone in a better way, for sure. And like Clayton said, there's so many things that just happen over the course of the year, whether it's drought or insane shipping scenarios that weren't planned for or considered. All that stuff sort of adds to a contract and gets updated so that, again, hopefully, you don't have companies going under and there being big problems, that kind of thing.
So Clayton, I loved your illustration of the paper you held up because it was upside down. And sometimes that's what they read like to farmers is it's like, okay, let's not worry about the details until we have to. It always starts with what's even going to get my interest. It's going to be what's in it for me. And I understand there's a business on both sides. And obviously, you've both laid out as well. Hey, part of the premium to the purchaser is them selling the product, and that they have to cover all their costs as well and make a reasonable profit. That's what I want to do as well. I have always held, so I have a barometer that I use. If somebody wants to talk to me about a specialty product, you know, currently I'm raising, a dark hilum soybean, which will be used in soy milk domestically. Before that, it was a food grade clear hilum soybean. I've done white corn, hard endosperm corn. You wanted to even get my attention to the then wave, an upside down paper in front of me, which I would take home to read then, Charles. It's like, I wanted to see that what that premium to me was going to offer me at a minimum 10%, income, above my standard price. And depending on some of the nuances, 10 to 20, so it made it easy to me. If somebody said, well, here's 50 cents in soybeans, that is, boy, if 50 cents in soybeans is 10% of the sale price, I've got bigger issues than that. But I needed to see a figure coming back to me at the farm because I've got to have a return. It needs to be 10 to 20% above that. And from there, we can look at some more of the details, which may fudge that factor a little bit.
So, Jeff, you talked a little bit about like that side of things, of how that's playing into your consideration of how you're contracting or whether or not you're going to fulfill that contract because of the premium it's going to offer you. But can you also talk about just how far in advance you need to know that information before you're planting? Obviously, when you buy your beans, that's quite a few months out from planting. But how far in advance do you really want to know what kind of contract you're going to get started on, so that you're going to have the right time frame to buy the right beans, to get them planted, and obviously go from there?
Right. So once you have that relationship established, you've learned what the cycle is on the other end. In my case, Schooler Grain, it's Ben Cargill. Once you learn their cycle, when you need to approach them about those questions about continuing, or to be fair to them, discontinuing, working with the product. So, that's going to start to begin here, probably from a tractor cab or a combine cab. That's one of the advantages of technology, and so much can be done while you're doing other physical work. Operating equipment is start to make those calls. What are you seeing? What do you think you're going to do next year? Because by that time frame, and so we're talking fall here, by fall, those users who are buying the grain are already starting to get a feel for how the market is changing. And I have, guys, man, I am surprised to see how much fluidity there is in market with these specialty products. I used to think this is what it is and it's going to be this way. I don't want to say forever, but for a long time. But man, it changes all the time. This year, one example, then I'll go back to your question. Last fall, last winter, I was asking, hey, I'm going to have a hard endosperm corn variety. And is there any market? Just curious. And they said no. Well, come spring planting time, that had completely changed, and they were looking to procure enough for this fall. So I was able to actually add a contract after the product had just been planted. It does change. Those products that have I'm going to call a stable shelf life. It's probably a bad analogy, but ones that they know are always going to be up there, like the dark hilum, clear hilum. We're going to be talking a year ahead of time. They're probably working on stuff for next year, but there is a lot of foresight you have to put into the process. It is never too early to start planning that. Not a hard set answer there, Emma. I can give examples, but I won't, where it was way too late in the process and I just have to move on with other decisions. That was one of my problems with raising seed beans, was those legal papers, legal terms that attorneys got their hands on. They would not have papers in place in March, and it's like, you got to be kidding me. It's like, I cannot wait till March to choose a variety. So I'll go back to start that relationship, talk early, talk often, and there's value in doing so.
So building off of that, then, Clayton, what are some of the most common types of contracts that you're putting in place with a lot of those growers?
On when you're talking about the conventional GMO side, and you're talking more deferred 26, 27 crop that guys are looking at, um, cost of production and all their jazz. They're mostly hedge to arrive contracts. There's specialty contracts within those. You got min max, you got weighted averages. Um, in years that the farmer doesn't know what to do, they do a lot more of kind of a lot, I guess, average price. Every kind of company has a different name for them. They all do the same thing where you can get like a floor on your futures price, but if it goes above that, you can capture some of that. And then there's knockout prices in between, and it prices out a certain number of bushels each day. So a lot more guys in years that they don't know what to do, you see a lot more bushels getting put into programs early on
Mm.
that kind of capture uh, 9 out of 10 years. The window in the summer is where you get the best bullish sentiments. And so people want to kind of take advantage of that. But once you get into kind of the harvest season and post harvest, it's
Mm.
usually flat price or basis contracts that guys will write up with us.
Awesome. Yeah, and then even I think we're going to switch gears maybe a little bit of looking at the strategic value of contracting. And Eric, maybe you can talk a little bit about this. So now, we talked a lot about how the contracting process works from a company like FS to how that works with a farmer like Jeff. Maybe let's talk a little bit about the international side of things, or the buyer side. And so what are some of those global trends that are driving the contracts? And obviously that's a great conversation to have right now, with so much changing. But, what are some of those trends? And especially, maybe talk a little bit about the specialty markets as well.
Yeah, and when we talk global trends, I think there's what has really kind of driven the landscape over the last 10 years. If you look 50,000 feet kind of thing, it's really the continued growth and expansion for countries looking for more protein, right? So that's what's truly driven this thing kind of upward, what's created a lot of the markets across the world. It's just been this huge push over the last decade plus. The other huge one is going to be, the recent expansion of U.S. crush. Obviously, that's a total driver. And then from good to worse, I guess, and the rest of it really is being driven by tariffs, right? So a lot of the unknown playing field out there, it's developing kind of really rapidly, and there's lots of changes on a pretty continuous basis. So for contracting, the overall development of that has just truly been about some of the things we talked about. It's getting to know who you're buying from, what their capabilities are, making it really clear and plain, and going over every detail, understanding. And we do a lot of those programs where we bring a lot of buyers here and they get to go meet people like Jeff and Clayton and see their operations. All that has a really great impact on fine tuning relationships, which at the core is driven back to a contract, where hopefully what I have liked about this business since the time I've been at it is that there's kind of a segment for everyone in the supply chain to make and add value, right? So I think if you talk through all those things, contracts sort of are at the base of, because you have them at every level of the supply chain. So continued development, little bits of things that we've talked about is truly crucial. Doing things like this again, I work for association, so I see real value in talking through really practical trade related issues, good, bad, or in between. I think the education of that is vital for sure.
Hey, Eric, I have a question for you. So when you look at let's just look at specialty soybeans here. So, our traded soybeans, we don't want to talk about those. If we look at, the food grade, the clear hilum, and give me a historical perspective. Yeah, I know we have some form of tariffs. They change constantly. So put that aside though, but how much do you see the dynamics of the international market changing for our product when soybeans are at $10 versus what we saw, 3 to 5 years ago when it was, $15?
Yeah.
And we often talk about so there's two questions here. Product quality compared to South America. I know I beat that drum whenever I have a group here. Uh, Also look at that same specialty clear hilum, non-GMO. Do we have those same advantages there versus the rest of the world? So two questions.
Yeah. So I think it's a great question. Absolutely. When things are far more expensive, I think you probably even saw margins sort of narrow at the same time, because different groups are going to have, whether it's the exporter or shipper, having kind of prioritizing an agenda to certain countries or destinations. That's always a big driver. And you work with a couple of companies that's a major part of their business. So they sort of fine tune that into a couple of destinations that they find priorities that where it's a good match. I think what you see is where we're having a reduced overall soybean price. I think you see that interest a little bit back. In the last 5 years are a little bit strange. I feel like I've been saying that over and over again. I'm tired of saying it, kind of thing, but they've been weird, right? COVID really threw a lot of destination markets into a total spin financially, and those that we really depended on in the midst of a lot of those and separate and coming out, a lot of that stuff has taken a really long time. So I think really over the last 18 months, we've gotten back to a point where we're kind of operating similarly to pre-COVID in the way of what you see as far as demand. Now, again, you throw the tariff piece out, and that's a bit of a different caveat here, but that truly is a huge part. Having reasonable economics, cheap freight in the way of containers, which we're definitely seeing now, improvements on the economics will just bring that back. A larger trend that we will see, and I do not think is going away at any level, is the interest for consumers to understand where products are coming from, and specialty and IP products are kind of, the start of that, right? They did that for a lot of years. I think we're seeing that continue. I don't think you see that go away in any level. Having things get cheaper, I think, brings more of the opportunity for more interest in that, increased demand. And I think as a consumer, you can kind of consider how easily that would be. I think it's the same for other destination markets, the same way. I know Clayton might have something to add to that as well.
Yeah, I mean, on the special side, if Nestle, Europe is always going to run a line of products, they're going to do that year after year after year, right? The growth potential is maybe a little less than like a GMO product that, hey, if tariffs aren't there, okay, China stockpiles cheap beans, not specialty beans, right? You've got different scenarios in different countries, right? That can't get the US dollar, but would love to, buy US beans. So, I mean, you've kind of got two angles there saying, yeah, the growth potential for specialty is maybe 2%, but if China comes in and buys beans, now we're at 7%, right? So, the growth potential on the specialty, it's 5, 6 years ago, yeah, everyone was paying the top dollar to go get that non-GMO beef or chicken or organic chicken. And today it's like, well, chicken still already costs $10 for a breast. Am I really going to go to 13 or $14? So the inflation rate in terms of what has happened on the consumer goods style, especially here, as we're talking the US consumer, right? The biggest consumer in the world has really kind of made it where, okay, if we're saying cost of living is 2.5% every year, and we're going to say specialty is going to be a 5 to 6%, I don't think you're going to see that growth potential if the cost of living is 2.5%, right? So I think it's not like the brakes are being pushed, but I think there's going to be just the status quo of, okay, we've got this line that's doing 50,000 bushels a month of non-GMO or organic or some specialty, and that's what we're going to stay at because the growth potential. And if it does, okay, we'll get those wildcat acres that following year, right?
Yeah.
Especially as you said, alluded to earlier, Jeff. Hey, I need my 10 to 20% return. And if the guys are sitting there saying, well, is 12% really worth it? I really need it to be 14%. Those flips of acres will really kind of divulge in that next cycle of the ag side.
So, hey, Clayton, you just made me think of a question. So I've had contractors, say to me before, well, and maybe it came after I said I'm not going to grow this, and they've gone, well, what would it take to get you to grow this? So I'm not going to share any of what my answers might have been there, but the relationship's probably already done at that point for that year. What do you two think it would take to get more farmers to grow some specialty soybeans, resulting in a contract? What do you think it takes?
I mean,
go ahead.
No,
You're great.
No, let's hear it.
Okay, I'm from the South. I'm usually much slower than that, but that's the way it is. I think Clayton sort of brought up the great point in that you see such variability in interest and demand outside of those companies who just put a full-on asset in. You've seen a good deal of that over the last 5 years with a bunch of U.S. companies. The variability comes in kind of with again, a lot of the points that he mentioned. It all has to sort of line up, right? You need every piece of the supply chain to be there and do it well. You have to have the farmer, you have to have an exporter that's committed to it, and you have to have a destination, a reliable destination. And they're not all that way, right? Everyone's not Japan, Taiwan, those that have just had such a reliance and a commitment, a long-term annual commitment to specialty grains in particular. I think a key is, and I think that's a lot of what Emma's work has been over the last 6 months and more, has been about educating farmers on the practical aspects. Look, farmers are like nobody, they're in the same way of traders. We kind of get used to doing what we do. That works. We determine it works, and we don't step out of that much. But educating them on some of the potential practical ends of it, having good conversations with folks like Clayton and you, Jeff, as well. That stuff is vital. Having farmer leaders understand whether those opportunities are there for them, and if they are, they can talk through them and have the introductions. That stuff is ever changing. Like you said, it from year to year, and the number of things you have grown has changed obviously over the last 12 years. That will kind of continue, and unless you're having those conversations continually, opportunities get missed. So I think that's where the low-hanging fruit would be is educating farmer leaders, next generational changes, all those things that are important to kind of help, because the runway on this tends to be longer, right? It tends to be more than, hey, I'm going to sell you, September beans here. Right? It tends to be a much longer runway, and the discussions are much more well in advance, like you've already mentioned.
Well, and I'll just add, as we're coming on to here, remember when I said it was the low hanging fruit, that it was the intern or year one, right? I mean, I kid you not. Right? How do you get a young trader to be like, I want to go trade specialty grains? Because it's high risk, maybe high margin, but the volume's super low. If you're a trader, you want to trade, right? You want the volume-based commodity, right? You want GMO corn, GMO beans, wheat, meals and, you know, any type of ingredient. The specialty is so niche that it's a, hey, here's the start. Here's, you've got to go out and get that farmer that has 200 acres. Well, if you look at any of the like, especially like, I'll take for FS grain, right? To be a big volume originator, you're at 15 million bushel plus. If there's 15 million bushels of specialty grains out there, that's going to be hard pressed to meet goals every year, right? So when you look at it in terms of getting those contracts, it's getting the young traders and saying, hey, this is a step that you can do this for a long period of time. But then if you're looking at growth aspect, well, that's here, and SIF corn trader or bean trader is up here, right? Container trader, like right down here, just a step above. But then you know, everyone wants to get into the bulk game, right? So that's where I think some of the question that says how do we get there? It's, you've got to start it on the trader side, which is how you get to that contract side.
That's a great thought too. I totally agree. I think it kind of comes to, you know, I think if you as a trader, you're learning to trade, it's like you mentioned, it's a bit slower burn. There's a lot more legwork that goes in. It's a great sort of start into the markets and understanding them well. That's a great point. Totally. You need young people to be interested in it, because that's how those trade agendas, that's how companies sort of, they pull that work together based on, you know, what traders are good at and what they are able to pursue well and what matches in the market. That's a good point for sure.
Clayton, when you mentioned traders, it made me think of the next step down. If we place traders at the top of the heap, okay, the next step down.
The heap.
Yeah, the merchandisers who are buying our grain. What I wish, and most all of my corn does go to a local FS facility, you know, an outstanding shuttle facility just a few miles away. Part of the beans go there. What I always wish. Well, it is, Clayton. I didn't make up any of that stuff. It's like I love going there. Man, it's just fast.
Look at the contracts
Oh,
there, okay?
You guys are going to do a contract on this Zoom call.
Well,
Let's save that for afterwards. I say supposed to take a step back. So
Okay, we can do that.
here's my ask from the merchandiser side. Every time I go into that facility and I see a shuttle, you know, being loaded up, I do not know why if I ran the place, Clayton, I would have a board there that says today's train is going here, because I think most farmers, in fact, I'm pretty sure of it, their relationship stops with the check. That's why we're in business. It's to make money. I wish that everybody knew where every shuttle was going. You know, a lot of them are domestic. And a couple years ago, a lot of corn going to Mexico. I think I believe if we knew where this product was going, it expands how we think of our product. And it starts to open up that possibility of markets that are more internationally based. You could probably find out, Clayton, boy, if this guy, and I'm one of those guys who always asks, Clayton, in case you didn't know, the guys in the dump pit, they know everything. You know, so I always ask them, where's the grain going, you know? But I think if you were to find those people that ask, where's it going, are probably the individual operations, which would be more in tune to the big picture and maybe more open to working with it, you know, a specialty grain or a contract, because they show some interest in where it goes. If you show an interest in where it goes, you may show an interest in, hey, is there more profit in specifically feeding that market? So yes, my request would be, I want a board there that says today's train is heading here.
Well, it's funny because anytime that we'll have like a unit go by, right, or you see a rail car, I write at least one of them down, go on the internet and search that rail car or that container number and say, oh, I wonder where this one's going. I wonder where that one's going, right? Because it's all that same question is saying, if it's going by us, it's probably going to the next facility down the line, right? So, oh,
Mhm.
they're getting a train. Well, why haven't we gotten one yet, right? Where ours is running, but it's also a gauge of logistics, right? Hey,
Right.
that one's running. I know mine's right behind it, but that crew has to get rid of that one to go get mine to come back. Um, so it's just, yeah, I can see that, right? And especially with like that facility can go east or west, right?
Right.
And now we get into the possibility of a carrier that UPNS that can go both ways, and who knows which way it's going to go, and is it going to the Southwest or Texas or Mexico or the Southeast? It's one of those where um, if you see the hole, most likely we're going to try and fill it from. If there's a hole in the west, we got to fill it from the east, right? If there's
Right.
a hole in the east, we got to fill it from the west. And and now I'm going to get way off topic, so I'll stop there. But it's always been a huge push for us and Eric alluded to it earlier with the domestic crush. We hard line, it seems, at 50 bushel to the acre, right, on national yield. Well, if we have a year that it's 40 bushel the acre and we've only planted 60 million acres, which in this case, if you look at it for next year, we could see that possibility because at $10 or 10.50 for new beans, it wasn't profitable. I don't believe 950 beans are going to be much profit for the farmer this upcoming year. So are we going to see a big switch in acres, right? And so this part of the contracting process is because, okay, are beans going to be $15 next year, or are they going to be 5 when we start talking about the number of acres and a yield? And of course we all look down to the south in Brazil and see that continuing to be a behemoth. um, they can say, hey, we want to take out 50,000 hectares this year and put it in the ground. And we say, hey, how about that solar farm on that 80 next to us? So, this but even that solar is part of the contracting process, right? Because that solar
Mm.
just got that farmer to contract for 20 some years at a huge dollar per acre. Well, that takes out now, you know, Jeff's 40, and now we're saying, okay, that now there's less acres, right? So less acres to contract, meaning that Jeff has to now produce 75 bushel beans on average. And we all know, maybe this year, maybe this year.
I think that brings up a really interesting point as we start talking about price, because obviously we know basic economics, and when price drops, then we have more international buyers that are interested, and that's increasing our demand, but we just don't have enough supply, or maybe we're going to start dropping that supply. So how do you see that starting to impact, and does that make contracting even more valuable? Because if some buyers are waiting to spot buy and then there's not enough left, how is that going to change the dynamic of the industry?
Yeah, I think what you're seeing at the export level, and we talked about it a little bit in the way of crush, soybean meal is changing the landscape of the export space pretty substantially, right? So
Mm.
I think you're seeing it kick out a lot of things into Southeast Asia, probably a bit
Mm.
more in the DDG space, probably seeing soybean meal kind of kick out some of those in portions and rations, and we'll be able to compete a good deal more in the way of markets that kind of have depended a little more on South America. So soybean meal is a huge driver for that. In the way of contracting, you're seeing some real development for understanding it, because in a lot of spaces in the US, it's kind of a newer product to be in the area and to be exported. So there's a lot of that early learning development, lots of companies that haven't really lived in that space previously are starting to live there because those supplies are there in a big way. The opportunity is there. and you're just seeing much more of a total capacity outlets for soybean meal in particular. So I think that's a total exciting part of the current export market, because like Clayton mentioned, some of the things that aren't quite always so there are some pretty heavy pressures on the current market. It's always good to look for some of the positives, but that is totally the biggest driver. I mean, I don't know the top five here in the way of, China and tariffs. We can South American relationships, and that we can go on forever. But you're seeing a real expansion in a couple of places, and I say it any chance I can. The marketplace is really versatile. I think we have a very quick responding market for when, whether it's trade deals or overall relationship or just basic economics can work. Our market can react really well, and the logistics are just pretty darn good. They're just efficient for the most part. I mean, they're a huge pain in the butt. There's lots of that I don't miss about them, but they are incredibly efficient.
Mm-hmm. Yeah, and as we start to kind of close out this conversation too, another question that I have for, I guess, the three of you is, how can we start to see more alignment between the producers, merchandisers, the buyers, all of the different stakeholders that are involved? How can we just continue to build the relationship through each level of that so that we can mitigate some of those risks that are involved with, lower production possibility or, obviously the changes in trade policies and tariffs? How can we just continue to build out those relationships and, all the way from start to finish, bringing in somebody like Jeff, bringing in a farmer, and then connecting them all the way through the merchandiser and then all the way into the buyer? I mean, obviously ISA steps in and wants to be involved in that, and we're not the ones doing the sales. We're taking that step back, but we're just trying to be the ones to connect each person within the value chain and really help to educate, to do the promotion. And obviously our ultimate goal is to build that demand. But how do you see each of those groups working together?
Emma, here's what I would answer where I feel there is the biggest gap. I started off early by saying, I need to see, when I'm looking at a specialty contract, 10 to 20% return for it to be worthwhile. Now, that doesn't necessarily have to all be premium. I would like it to be, but there's also some generally there are cost savings that comes with conventional soybeans or conventional corn. So if a contractor, a merchandiser, anyone there is just simply looking at the numbers and then they sit back in their chair and go, man, I don't understand why 25% of the farmers don't do this. It's like the numbers say that's where the profit's at. Farm profitability means, the farm's a success. The biggest challenge that I see is, and maybe it's simply a lack of acknowledgement that, when you raise conventional soybeans, conventional corn's pretty easy. Weed control is still very good. You just have to deal with some purity issues, cleaning out equipment, grain bins, isolating them. Soybeans, on any given year, you can just thoroughly have your reputation beat up, and the emotional stress that goes with raising a good product that's desired in the world. But the field can just look absolutely terrible. Now, I say that, Emma, I see a smile, but I say that, gentlemen, my 12 years of working with food grade beans, this is the first year my weed control looks outstanding. Wow. I will not, it does. It's like,
You better knock on something, man.
Yeah, well, but I don't know what I did. I know what I did, but I don't know why it worked. So that acknowledgement that your farming operations reputation is probably going to take a whack. And it's not like organic, where people know organic are getting significantly more dollars, so they live with that. But it's hard. It's just hard. There's a toll that goes to the farm of seeking those dollars, and it's not straightforward black and white numbers.
Yeah, I think that's a great point. It's a tough balance, right? You don't like our market overall. You don't want to chase an oversupply situation. So finding the right sort of balance in between is kind of perfect for all those parties involved. But again, that has to come back to having consistent conversations about the opportunity, whether in determining whether it's there for sure or not. Like Jeff mentioned at the onset of the call, this changes often, right? It changes on an annual basis where interest lies. That interest is, demand at the destination level, and it's interest with, like Clayton mentioned, companies wanting to participate heavily in that space in particular, whether it's conventional beans, corn, specialty, it doesn't really matter what it might be. All those parties kind of have to be involved and connect at the same sort of time. So it's not an easy business. It definitely comes with endless challenges.
Well, and I'll always go back to the transparency piece, right? Because when I got in there, it was you didn't know and didn't want to know. No one talked about what each company was doing, right? No one knew. It was all it's a big secret, right? That hey, I've got this and I'm doing this and that's it. Well, now with the World Wide Web like it is, right, you can pretty much figure out A and B, right? And the only thing that doesn't change year after year, Mr. Farmer is inherently long grain. Mr. Trader and end buyer is inherently short grain. And who's going to win that fight, right?
Yeah, simple.
And so that's that's the big thing. Hey, if we can get end buyer to pay a premium and that goes down the line, how much of that premium is the trading company going to take and that, right? And when we talk specialty, it's such a small percentage of probably each company that is doing specialty products, that it's in the long run, should it be given back to the farmer? Who's going to say yes or no, right? Is the trader or local co-op taking too much? Who's going to say yes or no, right? Because the one thing this industry has is consolidation, right? And so as the big get bigger and the small get smaller, how do we keep that transparency alive? Because the big boys don't really want to know what the little guy, and everyone kind of stays in their little lane, right? So just being able to keep the dialogue open, and when people go to the soy conferences and different things, that much more happens at there when you're face to face versus going talking on the phone, picking up or WhatsApping a buyer overseas, or Jeff sees it when he walks into the co-op, right? He knows what's going on because guess what? People like to chit chat, and so all of that comes into the transparency piece, and Jeff said it earlier. I'd love to know where that train's going, right?
Yeah.
And so that just takes it one step further to say, oh, hey, and I do it too. We send corn to, let's say beans. We'll send it's hard to say beans, but we'll do corn to Tyson, right? Or Pilgrims. And next thing you know, I'm in the grocery store and I see this nice Tyson chicken breast, and I'm like, that's probably my corn, right? And so it gives you that satisfaction on why doing it, right? When it goes into the export channels, right? You don't really see that satisfaction because you're not going to Japan and looking at, hey, this is the product, right? But the ISA and USEC and all these different councils that are promoting U.S. ag, it's worthwhile because you then get the satisfaction as a farmer or trader or end user that whole piece is connected.
Yeah.
So I think the theme I'm hearing, sorry.
Great.
I think the theme I'm hearing here is from all three of you guys that ISA just needs to keep doing our job, basically. So no, I think that's those are all really good things though, because that's one word that we have been striving for in the last 2 years, especially in my time here, is that transparency piece. Because if we don't as Eric even mentioned a little bit earlier, there's been more awareness of, or more interest in people wanting to know where their food is coming from. And so that's what I really see in the value of what we're doing for our market development department is bringing in those trade teams. And obviously if we're here domestically and like you said, if you see a train go out and it's going to Tyson and you see that product in the grocery store, that's great for a domestic market. But what we're doing in the international stage is trying to bring those buyers to us, and then they can get to a farm and they can put a face behind the name of the product that they're buying. They might have never been onto a farm. They might never see, a soybean in a field. But when they come overseas and come to Illinois, they meet with Jeff or they meet with any of our other board members. They're able to sit down and talk with them and realize that it's not a robot. It's not, something else that's putting those beans in the ground. It's the farmer, and there's a family component to it. There's an effort to continuously care for the ground that you're farming and that you're always working to build a really great product. And obviously we here in America, we've got the best growing conditions. We've got a competitive advantage when it comes to the nutritional profile of our soybeans. So, I mean, that obviously goes into not only the feed component, but it goes into the human nutrition or even the value when you go use it in a new use and for the soybean oil. So I think there's so much value in bringing those farmers in and, not only do they get to meet with our farmers, but we bring them to FS every once in a while too, and see that component. And I think they just get so much value out of that, and we can connect each part of that value chain in one visit. And I think there's so much that we can continue to do, and hopefully getting them in contact with our FS, with all the other grain traders, and hopefully getting them that contract at the end of the day. So.
What? There are no other companies. Come on.
We've got to keep it even, a level playing field here. Yeah, so I mean, does anyone have anything else to close us out? We've had such great conversation here this afternoon, and I've really appreciated you guys sitting down with us. But is there anything else that you want to close out with?
I'll leave one last point, and it's going to build off what something Clayton had said was not every farm is going to be well suited for specialty contracts. I believe an area where there is more opportunity is for that small or medium sized farm. I currently farm a little less than 900 acres. That's pretty much what I've always been, but I sought using specialty contracts and more dollars per acre as my way to grow financially. And because of that, I pay a lot more attention to detail, and it just falls in line with those contracts. I think it is a way for that small and medium farm to financially be on a better footing without having to, increase 10, 20% of acreage every year, which brings on a lot of strains. So that's where I would look at this as an opportunity for those farms in particular could probably adopt some of this and work with the relationships required easier than others.
Clayton or Eric, do you guys have anything else you want to close out with?
No, I'll do. Thanks for putting this together. I'm such a sucker for this. I think this stuff, it has kind of been a big part of the work that ISA does. This just bringing together folks that are involved with the supply chain. I don't think it gets much better than folks like Jeff and Clayton. So I think this is great stuff, and the timing is great too, right? As we head to a new year, we're going to see a lot of folks, whether they're bringing people and buyers into Illinois over the course of the next few months. Clayton mentioned some of the big meetings coming up, so I think it's great timing and a good trend to kind of continue for the next few months. So glad to be a part of it.
Yeah.
Yeah, and we've, FS Grain has always been, an indirect player in the export market. And, we're not the biggest exporter by any means, right? But getting that, the name out there and the brand and say, hey, okay, now I can put a face in front of the name. Thank you, Emma, for putting this together and thinking of me. And I know Eileen was just there like 2 weeks ago, so stuff that you guys need by any means, reach out and we'll be happy to assist. Hopefully we're not going anywhere. So
yeah.
Well, good. Yeah, it's been so great to develop these relationships in my time with ISA to not only get to meet with more of our board members, but also then branching out in the industry and really starting to continue that conversation outside of things. And then obviously putting out some good information like this to our buyers, to other farmers that want to know a little bit more. That's ultimately the goal of this, right? So that we can just educate at the end of the day and hopefully increase our demand and increase soybean sales, whether that be domestic or international as well. So really want to thank you guys for coming out here and just having a great conversation today.
Glad to help.
Thanks.